Hello, this is Matt on the Moon Lambo channel. I'm going to give you a ton of reasons in this latest Moon Lambo hot jam to be very optimistic that the best part for XRP this market cycle is yet ahead. Yes, it's been a blast to see XRP bottom out this cycle at 28 cents and rise as high as $3.65, hitting multiple new all-time highs this year. Of course, you'll love to see it. Took the better part of a decade to get here, but the SEC, they kind of caused a little bit of a delay there. But here we are. But there are so many reasons to believe that we're going to have a crazy euphoric blow-off top, which of course is historically normal. Like if that doesn't happen, this would be the first time. So already that should tell you something, because history does tend to rhyme with itself. But I want to share with you in-depth analysis from one of the best analysts in all of crypto, none other than Julian Biddle. Now he works with Raoul Pal over at a Global Macro Investor, and he's one of those guys where anytime anything from him pops up in my feed on social media, I stop and I read it, because it's just consistently excellence. That's what he puts out, is excellence. And what he's arguing here, as you'll see, is that we are not. There are tons of reasons. It's just a veritable cornucopia of reasons that this cycle is not over. And so you're absolutely going to love it. So if you've been fearful, because there's been a lot of fear mongering on the internet that, hey, this cycle's over, because there's no shortage of people saying that. If you're concerned about that, I think this is going to alleviate a lot of those concerns and maybe get you back into excitement mode, which is where, frankly, you should be, because the best almost certainly is yet ahead. I'm not claiming I know that for sure, but I do firmly believe that is what is most probable. So anyway, you're going to like this stuff. But and tons of stuff XRP specific too, including one analyst who says that XRP is going to teleport to $6. And frankly, that's not a crazy concept. And I know when we're moving sideways, stuff like that just sounds impossible to people. It's not. Like historically, once we get to the last phase of the market cycle, XRP runs for like maybe upwards of 3 weeks historically, and then that's it. So yeah, getting up to teleporting effectively up to $6, not a crazy idea. But before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. Take a look at this chart. This is the Others BTC chart. So Others, it's the top 125 coins by market cap, excluding the top 10 coins by market cap. So XRP's not in there, but it gives you a good feel for what's happening with alts. And literally for years now, you can see that that category, the altcoins, has been falling against Bitcoin. That is what this chart shows. And I always say, markets find bottoms. That's where we are right now with the Others BTC chart, which is what's on your screen right here. If history's gonna rhyme with itself, it's gonna rock it. So you can see what this blue, somewhat oval shape looks like here. That's tilted. He's saying that's where we're going next, folks. And it makes all the sense in the world to believe that. It would be very strange if it didn't, because then you'd be talking about, the same humans with the same DNA suddenly behaving dramatically different, like markedly differently, no longer interested in being greedy and rotating profits from Bitcoin into other coins to try and maximize this opportunity that happens once only every 4 years, roughly. Yeah, right. It's going to happen. And here is a post from Altcoin Vector, and it's the guys from Swissblock that run this on-chain analytics firm. Also consistently excellence is what they put out on social media here. And this is also the Others BTC chart. It's just that they characterize basically like what you would call like the psychological element of this, the emotions behind this, what people are feeling. And so they slap that on top of what's been happening on the Others BTC chart for the last few years. But you can see it's bottomed. And so usually when markets bottom, whatever the pair is, there will always be those idiots that don't know what the hell they're talking about, say, see, the price is so low, therefore it's over, it's dead. No, that's what people are saying about Ethereum this year. It's what people were saying about XRP last year. But as I insisted in both instances, markets find bottoms. Now I'm telling you that, again, is true this time for the Others BTC pair. It's going to rocket. We're going to have Altseason. That's a virtual certainty. And so Altcoin Vector shared that chart, and they wrote, altcoins, excluding the top 10, are not fading away. The decision point, so that's where we are effectively now, for alts is holding. They've resisted a bearish backdrop while Bitcoin has been correcting. This sets the stage for altcoins to have their moment. Q4 is the most favorable window, but positioning begins now. If Bitcoin capitalizes on its breakout, alts are poised to respond in unison. When I read that the first time, I was like, Q4, that sounds so far away. And then I'm like, oh, never mind, that's next month. You know, like we're almost at the tail end of this year already. Can you believe it? Time flies when you're having fun. So yeah, it's not exactly a crazy thought, though things could certainly get hot in September, and a lot of analysts are expecting that, by the way. Here's a post from chart analyst Crypto Wizard. This is the XRP BTC chart, so XRP denominated in Bitcoin, and you can see how it's been trading within a narrowing range ever since XRP hit its most recent all-time high in July this year. And so Crypto Wizard wrote, "Gathering steam. Do not fade this chart. XRP is pushing higher against Bitcoin and is getting closer to the symmetrical triangle breakout point. Once this breaks, a violent rally triggers to $3.65. Keep shorting, bears." Yeah, and that would be just to start. He does think that XRP, of course, would peak way higher than that, but he's saying just to get the party started, yeah, back up to all-time high territory. But look what he's talking about. He's pointing, look, this is the symmetrical triangle, but before we get to the apex, it's going to break out. Is it going to be to the upside or the downside? Well, given that we're in a bull market, it makes sense to believe what's most probable is the breakout moving to the upside. Obvious stuff. Did you guys catch the Blockchain Backer's most recent video from yesterday? It was fascinating. He highlighted a bunch of stuff, but he really spent time noting how perfectly things are queued up right now, and all the confluence, including on a macro scale, what's going on here. He cited, for instance, the Russell 2000, which is small cap stocks, being like 2.5% away from its all-time high, and I've been talking about that recently too. It's very, very close. It's sitting there so it needs a little juice there, and then once it starts going, my God, that's the reason we're watching that is if people are going to start putting money into the small cap stocks, that indicates an increase in risk on appetite, especially if you're going further up the risk curve into small caps, which are more risky than large caps, generally speaking. And it's the same concept for altcoins. You know, the further you go out from what's considered the large caps into the mid caps and small caps. But altcoins historically have never started going unless you have the confluence event of the Russell 2000 breaking out also. And it is sitting right there. It is so freaking close. And he also highlighted, Total 2 and Total 3 are basically, they're back at all-time highs already. So getting lots of confluence. And by the way, he also mentioned that he thinks there's a chance, he's not promising this, but a chance that you could these things really start to heat up this week. Of course, perhaps it could, flow into next week. But you're gonna see something happen, because once the Fed cuts rates next week, which is a virtual certainty, the market's going to respond to that. We'll see what it looks like, but yeah, it's coming. In fact, here's a post from Nick Crypto Crusader, and he said there is now a 100% chance of the Fed cutting rates in September, October, and December. You better be locked in, or you are about to be locked out. Yeah, I tend to agree with that sentiment. Either you have exposure when the awesome sauce stuff happens, or you do not. Which is why my investment strategy, I believe, is the best strategy for regular people. And I consider myself just a regular person, nothing special, not a finance guru, but I'm winning in crypto. Because why? Because I buy stuff and then I don't do anything. I literally am getting paid to do nothing. It's fantastic. You don't need to get in and out of positions. You don't need to get cute with things. Think that you know better than the market. You just have broad exposure and you ride it out. Even if it takes longer than you would prefer it take, you just ride it out. And yeah, that might mean years sometimes. Welcome to investing. But it's way faster than trying to get life-changing wealth by investing in the stock market. Although, of course, I have exposure to the stock market. But, I look at what you get. You look at what you can get if you had like an ETF that tracks the S&P 500. So you just get like, a broad exposure to the market, the stock market equities. And I mentioned this the other day, but it's worth repeating. In less than 8 years, I have achieved what it would have taken me, I think, something like 45 years to achieve in the stock market. That's how crazy the performance is in crypto compared to the stock market. But keep in mind, I'm saying that, and we haven't had the tail end of this market yet. It's not over yet. We haven't had the euphoria. So that could double, triple, quadruple. So like I just told you, I got in almost 8 years, 45 years worth of performance. That's how long it would have taken if I just invested in the stock market. But it could be, it could end up like getting to such a ridiculous rate. I don't know if that means it would be like 100 years worth of profits, whatever. I have to crunch the numbers. It could come to something stupid like that probably, in just like 8 years. And that's real life in crypto. It's not like people outside of crypto, that makes it sound like it's a scam. No, it's because the markets are illiquid. It doesn't take that much money flowing in to get it to double and triple and quadruple, and they just don't get that very simple concept here. But yeah, rates are going to get cut here. Here's the CME website. You can see it's literally 100%. That's what they're factored in here. So we'll see how many, we'll see how big the rate cut is. I think most people are expecting 25 basis points, which just means 0.25%. Some think it's more likely to get 50 basis points, 0.5%. Either way, we're going to get something, and the market wants that. Right or wrong, that's what the market wants. The market go and get it. Here's a post from eGreg Crypto, and he says, this is an XRP USD chart. He says, we achieved a bullish cross between the 21 SMA and 100 SMA on August 7th and 8th. However, we faced challenges breaking out of the descending channel on 4-hour time frame. This could be the third touch point, setting us up for a potential breakout. What we need now is a strong bullish cross and push. The key breakout point to watch is $3.03. Let's be ready for the action. So that's a level that he thinks is key here in the short term. And we're safely in the middle right now between that and where he thinks, we've got key support close to like $2.85. So watch for it. At some point, this thing's going to blast through it. The whole market's going to get hot. Here's a post from Dark Defender. He says, XRP on the daily time frame is poised to retest the $3 weekly resistance line. RSI is getting bullish. We identified the $2.85 level as a primary support level. So that's the same thing eGreg Crypto was citing. It says, which is currently acting as resistance. All support levels remain in effect. We are getting there slowly but steadily. Have a wonderful Sunday. So that was Sunday, and that was resistance, and we are at least currently above that. And so he was saying to watch out for that. At least right now, we are. Which is why in my very last video, I highlighted tons of examples of XRP chart analysts all coming to a similar conclusion, which is this could be a moment where XRP actually breaks out and really starts running. Here's a post from Chart Analyst Zoom. He says, interesting XRP Sunday pump. Hoping to get a full body close above by tomorrow and then tackle the $3.15 zone. Okay, so again, that was Sunday. We know that Monday went pretty damn well, actually. So we're still waiting for those above $3 levels. But at least at the time I'm recording this, it's looking very promising. So many analysts have cited that. Which is why this exuberance from Altcoin Gordon, I think, is warranted. He shared this with his 803,000 followers on X. He simply wrote, XRP has been consolidating at these prices for months. We will teleport to $6 and we will love it. Okay, and so I like that. And it's a fun way to characterize it, but really, the market does move that quickly very frequently. When XRP really starts going for its final parabolic advance, don't be surprised if in a single day you're seeing it increase perhaps even by over $1 at a time. Don't be surprised if that happens. And then we had this from Julian Biddle, and I was mentioning this at the outset of the video. Julian Biddle is the head of macro research at Global Macro Investor. So he works with Raoul Pal, a former Goldman Sachs executive, who's the founder and CEO of Real Vision and Global Macro Investor. And I'm telling you, really both of them, Raoul Pal and Julian, anytime I see a post from them on social media, I absolutely stop what I'm doing and I read it in its entirety. They are just that consistently good. They are top shelf. Raoul Pal is the reason that I am aware of the importance of global M2 and how historically it is like basically the macro indicator. If global liquidity is increasing, well, over close to 90% of the time, Bitcoin follows that. Thus, the entire crypto asset class does, directionally at least. And we know that what we should expect then is Bitcoin to move upward because there is because it lags behind global M2 by about 3 months. Level higher. And then they've also articulated reasons why they think that you're going to keep seeing that expansion for the foreseeable future. And I've talked about that on my channel as well. But still, in the face of all this, even though that's like, if there were one metric to look at that's the most important, to be clear, no metric, even global M2 is the end all be all. But if there's one that gets close to that, I would argue that it's global M2. And so Julian Biddle here, he laid out, and I'm going to share every single thing that he wrote here with you, but he laid out just an absolutely astonishingly excellent post here. And because look, the fact of the matter is a lot of people online are saying that the economy looks late cycle, like it's overheated and close to rolling over. But frankly, as Julian points out, and we'll get into, the data actually points to something very different. When you put all the big sentiment surveys together, manufacturing, services, housing, small business, consumers, CEOs, things are nowhere near the euphoric levels we usually see at the end of a business cycle. Instead, what we're seeing looks a lot more like the early stages of a recovery. Temporary jobs are, they're picking up again. Oil prices well below trend instead of spiking higher. That's a good sign. Nearly 90% of central banks around the world are cutting rates. Did you hear that, folks? Close to 90% of central banks around the world cutting rates. You know what that means, right? I mean, that's like rocket fuel for growth and risk assets because it makes money cheaper. So if people want to go out and take loans, or businesses want to take loans, they're more likely to do so because interest rates are lower. It gets all sorts of more money flowing throughout the economy on a global scale. And a certain amount of those funds are going to end up in riskier assets, including stocks and crypto. There'll just be a greater appetite for that because there's going to be more money sloshing around, which is what you would hope and expect for this point in the cycle, for there to be a big jump anyway. So it's all lining up perfectly. And historically, when liquidity floods the system like this, it drives investors back into speculative markets. It just does. And crypto is the biggest beneficiary of that. So for XRP specifically, this kind of early cycle environment is a huge tailwind because it combines rising growth with falling inflation. It's the exact macro mix that encourages capital flow to flow into high potential assets. So while yes, as I said, there are many talking about peak cycle, the bigger picture suggests the opposite, actually. We are more likely at the start of a powerful new uptrend. And that sets the stage for crypto and specifically for XRP to thrive. That's why this matters. And so here's what Julian Biddle posted. I've been seeing a lot of chatter on X about peak cycle and how the economy looks late cycle. So I wanted to tackle this head on and share a few thoughts of my own. This is from the August 21st MIT publication. A classic late cycle economy typically has all the following ingredients. Manufacturing sentiment is extreme. Think ISM about 60. Services sentiment is extreme. Home builder sentiment is extreme. Consumer confidence is high. Worker confidence is high. The JOLTS quits rate rising sharply. Investor sentiment is very bullish. Small business confidence is high. Job openings and hiring plans are rising. Wage data and surveys show accelerating pay increases. CEO confidence is strong, and CAPEX is booming. Now, I could add more to this, but when you score all of these inputs and turn them into a single time series, here's what you get. And let me go, he says chart one, so let me get back to, this is chart one right here, GMI Composite US Sentiment Index. And he says, using data from ISM, NAHB, NFIB, BLS, AAII, the Conference Board, etc., US sentiment, when viewed as a complete picture, remains very subdued. We're just not even close to the euphoric levels we see late in the business cycle, when everything listed above is stretched to extremes. Peak cycle is when the ISM rolls over from 60 plus to sub 50, inventories unwind and demand cools, supply and demand reset, inflation pressures ease, and the cycle eventually recovers out of the slowdown or recession, mostly depending on the extent to which financial conditions tightened during the cycle, particularly late on as central banks hike rates and drain liquidity. However, based on this full set of indicators, the data is pointing to something very different. This does not look like an above-trend late cycle economy. It looks more like an early cycle economy trying to build momentum. Another really important factor, and a key reason we believe both the ISM and the sentiment composite will grind higher this year and into 2026, is the sheer scale of central bank easing via rate cuts. Right now, nearly 90% of central banks are cutting rates. That is extraordinary, and on a forward-looking basis, it is a massive tailwind for the business cycle. By my playbook, the time to start talking late cycle is when the teal line rolls over and begins to drop, as central banks turn to hiking rates to slow growth. Even then, there's usually a 9-month lag before higher rates hit the real economy. Right now, we're just nowhere near that. In fact, the opposite is true. To my earlier point, slowdown or recession is largely a function of how much financial conditions tighten late in the cycle. Oil prices are a big part of this equation. When oil runs 50% above trend, that represents a massive tightening and has almost always signaled recession looking back to the early 1970s. However, right now, we are nearly 20% below trend and still falling, which shows this component of financial conditions is still easing. And so that's chart 3 he notes, so this one here. Also, as I pointed out many times in previous reports, when you look at temporary help services, it has early cycle vibes written all over it, which is chart 4. That would be this one right here. That's his fourth and final chart. He says, rising growth from deeply negative levels is an early cycle dynamic. It tells you the economy is in recovery mode, not rolling over. Late cycle is the opposite. Positive year-on-year growth that's slowing, which reflects an overheated economy losing steam. Why is unemployment still rising? Because it lags the cycle. Jobs data is a 6-month look in the rearview mirror. Here's the thing. Full-time hires are expensive. Benefits, pensions, overhead. So what do businesses do first? They typically increase overtime hours and bring in temp workers. Only when they feel confident do they finally lock in full-time staff. That way, they can scale without locking themselves into long-term payroll commitments. So this isn't late cycle, it's early cycle. Growth up plus inflation down equals macro spring. Soon transitioning to mid-cycle, growth up plus inflation up equals macro summer. That's how I see it anyway. So I don't know about you guys, I find that rather compelling because it's based on historical data, and he's just, I think, coming to a pretty rational conclusion here. He's sharing his own personal analysis based on the data, and I do find that compelling. And that's why when you see posts like this from Tech Dev, and he's been sharing various versions of this really for months actually, but he's showing the business cycle, which is what Julian Biddle was referencing here. And you can see when it's down here in the green, we're nowhere near overheating, and we haven't even started to get back up into the red. There are a bunch of metrics that go into causing this to pop. We're not there yet. And we've never had a crypto cycle peak without getting to these red bars. Never, ever, 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 ever. And this is why, given that this is elongated compared to previous cycles, this is why Raoul Pal and Julian Biddle are arguing that there's a very good chance that this cycle is going to peak going into 2026 rather than this year. In fact, Raoul Pal, he said he thinks it's possible it could go into Q2 next year. So I don't know if that's going to happen. And admittedly, that's a minority viewpoint. There are only a few analysts I follow that are arguing that. There's 3 of them, Julian Biddle, Raoul Pal, and TechDev. All 3 of them are arguing that. But I don't know. Off the top of my head, I'm not sure if there are any others that there might be, and I might just not be thinking of somebody off the top of my head. But, you know, given their track records, I'm taking them seriously. But what if they are right? It does not look like we're overheating here. So we can take it for what it's worth, but I know there's a lot of doom and gloom out there, and that's just because when prices go down, like that's just what you're going to find on the internet. You're going to find people bitching up a storm. And then as we reach the cycle top, even if we're at the top and people just don't know it yet, they still believe, they're just euphoric and they believe it's going to go on forever. So they're constantly wrong-footed. So don't go by what the masses think. This is why you need to be really selective about who you listen to, or else you're going to get some bad messaging. So nobody knows for sure. I admit I don't. But it's about probability. What is it most reasonable to assume is likely to occur? And I think what's most reasonable to assume is that we're going to have euphoric blow off top, just like always. We're not at the end yet, though we are later in the cycle than, than maybe some of you want it to be. I mean, I'm happy to get the thing over with and just get the life-changing wealth personally. I'm like, just wrap this bitch up. Let's do it. And then we can go into a bear market and buy stuff on the cheap. I'll be ready to do that too. But it's coming, and you're going to see XRP go on a final parabolic run. You're going to see it enter face melting territory, and that's what I believe is most probable. That's what I think is coming. I'm not a financial advisor. You should not buy or sell anything because if anything I say are right, that would be a very, very, very bad idea. Until next time, to the moon, Lambo.